Don't panic. BeachBum traders don't panic. Welcome. Thank you, fellow BeachBum traders, for joining us for part one of our weekly trading game plan for the week of June 20th through the 24th. And again, one of the main reasons we started this YouTube channel of the BeachBum trading community was to try to help people not to panic, not to lose money, panic selling, etc. That was one of my primary goals in trying to share some of our experience. Again, thank you to our BeachBum traders who joined us in the live stream today, Spacula, Douglas PC, Walter, thank you for joining us. Please give me a thumbs up in the chat and let me know if the volume and the video is looking okay. And again, thank you for joining me. Again, when I think of Don't Panic, I think of Douglas Adams' The Hitchhiker's Guide to the Galaxy, and I don't know how many of you remember that, have read it. I will apologize in advance for the analogies that I make with that. I think we could use a little bit of levity given the chaos, the choppiness, the volatility, and the negativity in the market. So I hope that helps, and we will talk about, why you don't panic and how we can hopefully help you not to panic and lose money. So good. Thank you, Walter. I appreciate it. So we'll get started. Again, thank you for joining us for part one of our weekly trading game plan for this week. We'll jump right in. We'll jump over to FinViz and look at how the markets ended up on Friday. Friday was a little bit of a recovery after the bloodbath on Thursday and the chaos after the Fed meeting. Good morning, Tanvir. Thank you for joining us. And we could see we had, they bounced around a lot on Friday. It was kind of a tug of war. It was also a quad witching day, which adds volatility and more tug of war. And so it was options expiration, etc. So, and headed into a long weekend. Just a reminder, we'll talk about it again in a second. But Monday is a holiday for Juneteenth, so all the markets are closed. So enjoy your long Father's Day and Juneteenth holiday weekend. But we'll get prepared for next week, a more exciting week in the markets, I'm sure. So we could see, a lot of weakness under the covers. There were more advancers than decliners, but still a lot of weaknesses. And we could see the main strength on Friday was the big mega cap old FANG name. So there was this flight to those names on Friday. The NASDAQ outperformed. We'll see that in the indices in a second. We look at a little bit of the news, still saying danger, soaring gas prices, Bitcoin. We'll talk about the crypto winter a little bit, probably more in part two. And then selling. We saw oil broke down. It broke down from 120 and actually is breaking down below 110. So oil's definitely rolled over, and we'll see that. Also, natural gas rolled over and was declining. Gold picked up a bit. And then we see the futures right now are showing green. We see all the treasuries are up over 3%, and there's been a number of inversions where the shorter terms have a higher yield than the longer term. So let's jump over and look at the indices. We'll look at the SPY first. And again, we're going to see very similar behavior. We see a sharp decline on the daily. We'll look at the weeklies for each of these guys. Again, this is FinViz, both the homepage and the search. You can find our link, our affiliate link to FinViz in the description box below. We see, this major breakdown in the SPY. It's well below its moving averages. It's fallen off a cliff. And we've been saying, for a long time, we're in a bear market, and we're still in a bear market. And we've been talking about since the beginning of the year how we can make money and play bear market. So again, I'd encourage you to go back to our videos about bear markets, how to make money in bear markets, etc. We can make money in any market, and hopefully you are making money using our previous strategies, but we'll keep reiterating that and hopefully helping you make money in this bear market until things change. So we'll look at the Dow, DIA. Again, same thing, fell off a cliff. They're all going to kind of look very similar. Qs, the NASDAQ. Again, it just fell off, broke down through support, kind of, free fall down. Look at the Russell. And again, very similarly, no real support. Everything's just kind of, in free fall right now. Look at the VIX a bit. The VIX didn't really jump up that much. It's hovering in the 30s, and we'll talk about how we're playing the VIX. A lot of opportunity again. You can see it's still elevated, but it didn't really pop up on Friday. Usually, quad witching is a pretty volatile day, and it really didn't pop up. Obviously, during the Fed meeting, we had a lot of volatility. Initially, the reaction was negative, then it was positive, and then it was negative again. So again, we'll talk about trading volatility. Again, something to note with volatilities, we're going into this long weekend, 3-day weekend, with the markets closed Wednesday. And typically these types of long weekends, when we come out of them, there's higher volatility. Now, we're also in summer. Summer tends to be slower trading, less volume. But again, we're kind of looking for a pop in the VIX coming out of the long weekend. So now let's look at some of the groups and sectors, what the performance in the groups was this week. Again, this is the Groups tab in FinViz, and we have another video. You can find that in the notes. And again, the link to the Google Drive folder that contains the notes for our weekly trading game plans is in the description box below. We'll also probably put this direct link in a comment. So yeah, we're going to talk a lot about the VIX, probably a little bit today and probably more in part 2 specula, because I think that's one of the major opportunities right now is trading volatility. You'll see we made a nice profit. We're going to make more. So we see Friday was kind of, and what we're going to see in this is a kind of a sector rotation. So things that were underperforming, Friday they got a pop. So everything that had been underperforming, consumer cyclical, communications, technology got a pop, and energy was the biggest decliner. So energy's been outperforming. So I suspect, and basic materials, utilities. So I suspect a sector rotation, profit taking in these sectors, rotating into the ones that were underperforming. So again, for the week, we see defensives were better. Again, we see this, rotation out of energy. This whole week, it was a rotation out of what had been outperforming and into some areas that were underperforming. So, but again, for the longer term, we see energy, utilities, consumer defenses were the stronger areas. So now let's look at specific industries quickly. We could see solar got a little bit of a pop, and we're going to talk about energy quite a bit. Again, probably more in part 2 tomorrow about how to play this what's going on in energy right now. Again, the underperformers got a pop on the day yesterday, and the outperformers, energy, oil, etc. Silver had popped up on Thursday and then retreated on Friday. Similarly for the week. And again, we see solar's doing quite well, and that's interesting. And again, we're going to talk about a thesis on energy more so in the very near future. So. Okay, we talked about, you can see more information about how to use the Groups tab in this video. Again, there's a lot of this very powerful tool. You could delve into any of those areas to find individual stocks. And again, there's the link in the notes, etc. So now let's talk about the exciting economic data that we had this week. Okay, so again, in the notes, and also you will see, let me jump and open that guy up. I'll let that guy start opening while we talk about this. In the Surf the Markets channel within our Discord, I try to capture this information from investing.com, also post it there, as well as in the notes for the next week. So again, on Tuesday, we got PPI data, and it was a little under what was expected. So the producer price inflation was a little less than expected. So that was a little positive. And on Wednesday, retail sales was poor. So these are indications of the coming recession. Which, in my humble opinion, again, we're not financial advisors. This is for education and entertainment purposes only. But in my opinion, I've been saying we're headed for a recession. And in my opinion, these are indications. The weakening in the housing market and now retail sales, etc. And again, in my opinion, are indications of the coming recession. So again, we saw retail sales was poor. Last week, I believe it was, we heard the consumer sentiment was very bad. Um, then we could see, and I've got an article linked below, that crude oil inventories was higher than what was expected, and that I expected that to cause more of a reaction in oil, but it didn't immediately. But then later, we saw that roll over in oil. So you can see this article. You can click on the link in the notes, and they talk about oil inventories unexpectedly rose. Later on, we're going to see the Baker Hughes. There's actually more rigs online. So even though the news is talking about an underproduction in oil and the politics of that, the oil companies are actually bringing more rigs online, and they have been for a while. We pointed that out. They were doing it quietly, and now it's more dramatic. Oh, and then so then on Wednesday we got all the excitement with the Fed. So they had originally said 0.75 interest rates was off the table, and they went and raised 0.75 at that meeting, and they talked about that a 0.5 to 0.75 for July is definitely on the table. So the predictions in the market were really expecting a 0.75, and so even though there was an initial kind of negative reaction when they announced it, it turned positive for that day, and we got some volatility, but not extreme. And then on Thursday, as they digested what all this means and what Powell's comments at his press conference meant, it turned very negative. So we can see, again, they raised the interest rates to 0.75. So their Fed rates, 1.75. They raised the outlook for 2022 to 3.4%, core inflation outlook to 4.3%, and for 2023 to 3.8%. But they didn't change their quantitative tightening plan. They're sticking with their previous plan for quantitative tightening. And that's a long discussion about will raising interest rates do anything to curb inflation. My humble opinion, I kind of would have liked to see them increase the quantitative tightening plan, pull money out of the system, and I think that would have a bigger effect on inflation. So just, again, in my humble opinion, this is not going to reduce inflation in the near term. So I may be wrong, but that's my opinion. I think we're still going to have raging inflation for quite some time to come. And again, then on Thursday, we saw the weakening housing market. Again, we've been talking about this for quite some time, that I believed that the housing market was going to roll over, and that's what we're seeing. We'll talk about some of the other impacts of that as well. We also see jobless claims is going up, so unemployment's going up. Another thing that came out of the Powell discussion is he seems less concerned with higher unemployment and more concerned with killing inflation. So killing inflation now is the theme, and if unemployment goes to 4 or 5%, they are less concerned about that. So we will talk about the implications of that and prepare for it, and how can we uh, make money, given that environment. If inflation's that's their battle, and unemployment's going to go up, then how do we play that? So then on Friday, again, it was a quad witching, June options expiration. Uh, Powell had a speech. It wasn't really broadly aired. From what I heard, it was pretty much consistent with what he said on Wednesday, because you don't want employment first. It's so high. Yeah, it's the wage price spiral. Yeah, that they think that will contribute to more inflation. And inflation's bad. I mean, I'm sure y'all have gone to the supermarket and seen, how much more groceries are. We know gas prices are out of control. So then again, as I was mentioning, so we got this industrial production was bad. Again, all of these things lead or indicate to me a slowing economy. We're headed for a recession. Then I talked about the fact that the Baker Hughes, the rig count's up. Again, it's not, where they don't announce this a whole lot, but oil production is increasing. So, and at the same time, a recession means, decreased demand to some degree. So, yeah, paying rent at the gas station. Yeah, good one's back. So again, I'll jump over to investing.com. We'll look at the economic calendar. I'll also bring up this earnings calendar from Benzigo. We could just kind of see what it is. Again, markets are closed on Monday for Juneteenth, National Independence Day. So enjoy your day off. Enjoy an extended Father's Day. And just as a quick reminder, too, is you can find these links to all these tools. Again, they're in the notes. We also have them on our homepage, beachbumtrading.com, bum without the U. In the links section, you can find quick access to all these various tools, FinViz, etc., investing.com. So let's look at the economic calendar first. So, Walter, you're in Cleveland. That's cool. I'm originally from Kalamazoo, Michigan, long time ago. I moved south a long time ago. But my mother still lives in Kalamazoo, Michigan, so I need to get back up there to see her. So if she listens to this, and then I'm going to be in trouble because I'm going to be committed. So we'll see. So again, markets closed on Monday. Tuesday, we've got existing home sales. Got some mortgage information. Again, mortgages are going to jump because of the Fed decision. Also, interest rates on credit cards and on your margin loans and any kind of adjustable rate mortgages. Everything's going to jump because of that Fed decision. And the banks act really quickly. The last time they did it, we got a notice very quickly that they were raising their interest rates. So yeah, you want to get out of anything that is interest sensitive to interest rates. So thank you, Spec. I don't know if she listens to very much. I try to get her to listen to my videos, but I don't know if she does very much. It probably bores her to death. So um, so Thursday, we've got jobless claims, typical. We've got oil and gas type stuff. So not a lot of And then Friday, we've got consumer sentiment. Again, the last time this was really bad, and generally it's not a terrible indicator of the market, but it was historically bad last time. So they may be looking at that to see, is the consumer going to quit spending, and how fast might that lead us into a recession? So again, more volatility. The market's so jumpy right now. Is anything slightly negative, we get a pretty severe reaction to. So again, here in this same economic news, you can go news, economic calendar. You can also get to the earnings calendar here in investing.com very easily. So again, you can see who's reporting earnings. Lennar is going to be an interesting one because again, we hear of this rollover in housing, and if they report bad earnings, that's really going to exacerbate that rollover in the housing industry. So here's the Benzinga earnings report, the graphic, and I'll post this out in the Surf the Markets channel in our Discord as well. I just received it very recently. So we see Steelcase, we got Lunars, we got some furniture. So again, housing type stuff. We got FedEx, Darden restaurants. That might be interesting to hear if going out to restaurants is decreasing. So cool. So again, I'll put the link to this in our Discord. And we put all the economic data in the Surf the Markets channel in our Discord, so you can see it there real time, or as close to it as I can get. I'm putting the graphics there as Douglas PC requested, and also the data, and then it's also in the notes for our weekly trading game plans. So now we'll jump over to Webull. I'll let that guy load a second, and I'll show you. Okay, so here's our homepage, beachbumtrading.com, and if you scroll down to the links categories, you can see links to their trading platforms, Webull, etc., tools, Benzinga Pro, FinViz, investing.com. All the tools that I use, I keep here for a quick reference. So I just go there, and then I can very quickly click on any of the tools that I want to bring up at the time. So we can see Webull still offering 6 free stocks when you open and fund an account. So if you're not already using Webull, we highly recommend it. It's our favorite trading platform. And you can see the first 2 free stocks you get are up to $300. And then you get 4 more free stocks when you fund an account with any amount. And each of those is up to $3,000. So again, they're still offering the 6 free stocks. It's probably the most I've seen them ever offer. They started that for their 4th birthday. It's still going on. I don't know how long that will continue. So if you're not already using Webull, I would highly recommend it. Yep, we think so too. And we really like the 4 a.m. to 8 p.m. Market hours of Webull. I don't know of anybody else that offers that. So now let's look at the market screen for Webull. I'm going to go to markets. And we can see from Friday, we had more advancers and decliners. Again, Friday was a little bit of a reversal day from the bloodbath on Thursday. But still, the New York Stock Exchange had more inflow than the NASDAQ. So even though the Qs, the index, was outperformed for the NASDAQ, the inflow of cash is still higher for the New York Stock Exchange. So I think that's kind of interesting. So if we look at the best performing industries, let's look at it for the week. Mostly red. Again, mostly red. Not a whole lot of green. So and we know the week was pretty bad renewable energy. So there's our solar trend. which was a little positive. So. Okay, let's go back and look at ETFs. Do you also use, okay, Walter's asking, do you also use Thinkorswim? Yes, I use Thinkorswim primarily for data. I have it up on one more, actually several other machines during the day, and I have charts up and I have a scan up so I can see some chart movement in Thinkorswim. I also collect data from Thinkorswim, but I currently don't do any trading in Thinkorswim. We do the vast majority of our trading in Webull. I do have some very old accounts in what originally was Options House. I don't know if any of you even remember Options House. And then it got bought out by Trade Monster, I believe. And then it got bought out by E-Trade. And I can't even remember. Somebody might have even bought E-Trade now, but we still have some accounts in E-Trade. And I have some 401ks currently still stuck in Fidelity. So we've got quite a number of accounts in a number of platforms, and I trade all of them. Yeah, Options House was at the time was the cheapest commission. They had like $4.95 commissions back in the day when everybody else was like $7.95. So when we first started trading over a decade ago, or about a decade ago, Options House had the cheapest commissions. Nowadays, it's free commissions, so you don't care. So now it's other features of the trading platform, like the hours and the ease of use. Again, you can see I'm using the browser version of Webull. I also have the desktop version, but the browser version is very easy to access, so I tend to use that the most. But to trade options, to create new orders for options, I pretty much have to bring up the desktop platform of Webull. So you can use both. I also don't use the mobile. I'm not a big smartphone person. It's too small. I need a keyboard to really actively trade and do things. So I don't use the mobile version, but there is a mobile version, obviously, for most of these platforms. So um, I hope that answers all the questions. Probably more information than you wanted. So if we look at so we see down on the Dow, see up on the Q. So they're still, betting up on the Nasdaq right now. Short on the VIX. Yeah, the VIX is retracing right now. Would need a little bit of a catalyst, some bad economic data, etc., to kick it up again. They're betting a little bit up on the Russell. That's a little interesting. And not real definitive on the S&P, so that's interesting. Yeah, I don't know. I've never tried Douglas Douglas PC. I've never tried voice on the mobile apps. Yeah, again, I haven't really gotten much into smartphone stuff yet. And I won't bore you with that. One of these days we'll talk about what I really want is a mixed reality headset where all my displays go away and I'm trading through my glasses. So I may have mentioned that before, but from the beach, that's my objective. So if we look at industries, we see healthcare was positive, industrials, communications, consumer cyclical. Again, this is all Friday, so it's a little skewed towards what happened Friday and not so much for the week. So we can see, what we saw in the groups tab in FinViz, real estate, healthcare. So again, that was all Friday. Yeah. Yeah, we should, Douglas. I have ideas. I think I mentioned to you. I designed a system like that. Shoot, it was I think in 2005 or something. Because my goal's always been able to work from the beach, and I designed a system. And now some of the technology is actually more feasible. If you go look at our trading while traveling reviews. and also on our virtual consulting channel about the mobile hotspot. We're now able at least to get internet connectivity. There's also Starlink, and we're looking at Starlink as a backup. But again, it was in beta. It was pretty expensive, but Sonia's looking into that again. So we'll see. So if we look at commodities, it was interesting. Yeah, I was looking at softs. We'll look at the futures in a minute. Cotton kind of fell off a cliff, and that was kind of interesting. Livestock, we'll talk about that as well. There's something going on, and I finally found out what the issue was with the prices in livestock. Yeah, we'll talk about how we're trading volatility, Tanvir. Yeah, I think, eventually we're going to get another spike in volatility. It's just a matter of, what's going to trigger it and timing. But again, we think that's a great opportunity. It's just trading volatility. So we see softs, okay, broad. Short term, yeah, the yields on short-term bonds is very high. And we'll see that again in the futures. So we'll jump over there. So let's go to the futures. And to answer your question, Douglas PC, is technically the VIX is really a volatility gauge. So people tend to say, well, the VIX only goes up when the S&P, and it's only on the S&P. So it doesn't matter what the NASDAQ does, etc. The VIX is only on the S&P. And again, it's a volatility measure of the S&P. And technically, the VIX can go up whether the market goes up or down. It's volatility. And again, UVXY, VXX are long volatility, long the VIX. So again, it can go up even if the market's going up, but the tendency is that the VIX tends to go up when the S&P goes down. That's the general tendency. So I am working on videos to talk about trading volatility, and part of that is I want to go into the definition of the VIX and go into more depth on the VIX, etc., as well as SVXY. I have a video coming out about SVXY and SVIX, comparing those two. So, and I'm working on others about trading volatility. So I think that's important right now. I think it's a major opportunity while the market's declining, while it's choppy, etc. So watch out for those. The SVXY one should be coming out soon. I don't think we've released it yet, but yeah. Yeah, again, I need to go into the actual definition to define it further. So futures we can see down, broke down through support. We see it tried to make a little bit of a rebound on Friday, but not much, and so the tendency is down. All of them, Dow, SPY, Nasdaq, Russell, etc. I really want to find some ETFs to be able to play some of these global markets because you can see they really fell off a cliff, but I don't have good ones yet. So we see the chop back and forth in the VIX, the previous spike. It's about this 34 level. So yeah, it will, unless something happens, to trigger it. Now Tuesday again, it's a long weekend. They tend to cause increased volatility on coming back. And what we have is good to cancel orders sitting out on SVXY to buy it at a bottom support level that corresponds with this spike in the VIX. You can see, and we'll talk about it again more tomorrow, that we had orders. We took profits when it retraced. We got a nice profit. We immediately put those SVXY orders back out there for the next spike. So whatever triggers that spike again in the VIX and they're large orders on SVXY, they'll hit even if I'm sitting out on the beach, and then we'll ride it back down. So Yeah, cattle's up. I'm going to talk about that one in a second because I wondered what caused that, and I finally saw the news that was causing that. So we see the rollover in oil, which is good. Um, rollover in gas. We'll see the rollover in natural gas. So again, we've had positions for a long time in drip, shorting oil. We have one in cold, KOLD, shorting natural gas. Um, those are the ETFs that we use. There's another one you can short, WTI, is SCO. So if you're looking to ride this momentum shorter term, you could use drip on oil producers, oil and exploration companies, and cold KOLD on natural gas. The inverses of those is Gush is long on oil, and BOIL is long on natural gas. We see gold made a little bit of a recovery. We'll see if it breaks out. We'll talk about some of the tailwinds that we believe are behind some of the precious metals, gold and silver. Copper decreased. I looked at that. There's an ETF COPX that is long on copper, but it's not really at a bottom yet. So I'm not really aggressively pursuing that right now. And then, yeah, okay, so let's talk about the cattle bit. I saw this jump up and then a little bit of a drop off in this behavior. I didn't know what was causing that. And I guess the heat wave in Kansas and in the Midwest is actually causing cattle deaths, which again would decrease supply and would cause prices to go up. So there is an ETF to play this. It's COW, COW. So it's not one I'm pursuing right now, but I thought that behavior was odd and didn't know what was behind it. So again, there's the heat waves in the Midwest are causing cattle deaths, which is going to decrease supply, increase demand. So we see lumber's come way down, bounced up a little bit. And then we see the treasuries, dumped, and then we had this little bit of a risk-off bounce. Um, I really want to find something to play the 2 years because that I wish I had it when it fell off the cliff here is where I really wanted to be able to take that. So yeah, there's some major heat waves hitting various parts of the countries, causing issues. So. It's causing power outages or shutting off power in places. It's causing a lot of disruption. So we'll see what comes out of that. I hear that news, and I don't have a thesis right now on how we can play that very well. Then we see the dollar had started to decline, which helps commodities, and then it bounced up on Friday, which probably hurt the commodities some. So. Yeah, I agree. Well, again, I live on an island, Douglas, PC, so it's never too bad here. It doesn't get too hot, doesn't get too cold. It's for me, it's just right. So some people think, oh, Florida's too hot. Well, not if you're on an island, so or on the beach in the water a lot of the time. So let's talk about our strategies for this week. And then tomorrow, we hope you all come back at 10 a.m. Tomorrow on Sunday, and we'll pick our stocks that fit these strategies and all this data that we've seen. What stocks are we going to watch for next week, the June 20th through the 24th? So again, my main theme is don't panic. And again, I'll reiterate that one of the main reasons we started all this is I wanted to share my experience. We saw people get hurt in the 208, 209 major recession. The markets dumped 20, 30%. People had money in their 401ks. They panicked, they pulled it out, and they realized a 30% loss. And then it took them a very long time to recover that. And they realized that loss. So one of the things I try to help people learn is don't panic. You only really lose money, realize a loss when you sell. So if you sell at a 20 or 30% loss, or you pull your money out of the 401k at that point when it's down 30%, you've now realized that loss, and you just have to earn that money back. And that's where people get hurt, in my humble opinion. And we don't want to see people do that. So I try to tell everyone that I talk to, don't panic when this happens. It's going to happen from time to time. Don't panic. Um, Again, my point is, you still own the shares. So if it plummets and you don't panic, you don't sell at that point, and there's nothing fundamentally changed. The U.S. economy hasn't collapsed, the world hasn't ended. Eventually, and that's the other point, is eventually the markets have always recovered and gone back up. It's just a matter of time, and nobody can predict very well how long it's going to take. There's data, and I'd love to have time to pull up that data. Other people are talking about it. How long was the average recession? I could say it's 12 to 18 months. But in the major busts, the dot-com bust in 2001, the Great Recession, etc. It could have taken, a decade to recover from where it was before. So it can be a long time, but the markets have always recovered. So if you didn't sell in 2008 and you just sat on your shares in your 401k, today you would have made money. But if you sold at that point in time, you lost 20 or 30% of your money, and you probably have never recovered that, other than, making more money and putting more in. So again, that's our big message is, if this happens, don't panic. Now, there's a whole nother topic on the time value of money and opportunity cost, and that again, that's a whole nother topic. Sometimes you're better off selling if it's not a major loss, and you can redeploy that capital to make it back faster. Again, that's the time value of money and opportunity cost discussion, and we'll have that later. But when the market just plummets and you're in a 401k or something like that, you don't want to panic sell, pull your money out, and realize this major loss. So UAE suspended wheat imports from India. Yeah. Yeah, there's a lot of volatility in these commodities. Again, those are opportunities. Watch the futures. That's what I do. I look at that FinBiz futures chart, multiple times during the day. A lot of times I have it up all day. You can zoom this in to hourly, 5 minutes. Again, I've got a video on how to use that. And you can, if there's an opportunity in those areas, you can take advantage of it. So another point I wanted to make under the don't panic topic is, if you're underwater, if you've got an unprofitable position and it's underwater, but fundamentally you believe in the company or whatever it is you're holding the shares in, one way you can potentially make money while you're underwater is sell covered calls. And just keep selling covered calls against it, keep collecting premium while you're waiting for it to recover. And we've got a couple of videos referenced there on how to sell covered calls against a position. And again, that's what we typically do, is if we've got a position that it's unprofitable and we think fundamentally we want to hold on to it, no reason to bail. We'll sit there and just keep selling covered calls. Now, some of them may also pay dividends, so we're collecting dividends. We're making money with covered calls, and we wait for it to recover. When it becomes profitable, then we sell at a profit. So another topic I wanted to talk about is, okay, we heard what the Fed's doing. Now, how can we take advantage of that? How can we make some money on that? So one of the things I heard on one of Jim Cramer's shows, and I listen to Jim Cramer all the time, have for many years, and whatever you think of him, to me it's data, and I take in as much data. So I listen to Bloomberg, you know, their weekly show, their daily tech show. Again, I take in as much data as I can, see what correlates and see what opportunities. And one of the things he mentioned as some post-Fed opportunities potentially is one is banks. Because raising interest rates is good for banks. They loan out at the short term, the higher rate, and then what they're paying in savings right now is still it's like 1% or less, and they're collecting, 3 something on or higher now. Mortgages like 6. So they're collecting 6 and paying 1. So that's good for banks. Now, recession is bad for banks because people they're not making as much, they're not taking out loans, etc. So it's kind of a mixed bag on the banks. But it's something to think about. We'll talk about that more as we go forward. There may be an opportunity there. Then the other one I really like is gold. And gold and silver, and y'all know we've had a position in gold and silver as an inflation hedge, a store of value for a long time. And just another reason is the exodus from cryptocurrencies. And I think we're starting to see that is as the cryptocurrencies are crashing, there's all this talk about the crypto winter. I think you're seeing more of a rotation of some of that money into gold, silver as a hedge versus inflation. Gold's always been described as a hedge of inflation. Any dollar price commodity is oil, silver, gold, etc. And again, people have always gone to gold as a store of value, hedge against inflation. So I think we may see more tailwind in gold. It's still at a pretty attractive price if you want to get in. Our favorite is GLDI, which is a monthly dividend paying ETN on gold. Silver is SLVO. Again, those are the monthly dividend payers. We own some pretty sizable positions in there, in both of those. And we're just collecting monthly dividends, waiting for gold to go back up to 2,000. Then we might sell our GLDI, wait for it to come down and buy it back. And we've done that a number of times. So if you're interested in that, again, GLDIs, we own several miners as well. But again, that ETN that pays the monthly dividends are favorites for gold. So I want to wrap up pretty quickly, but again, we're continuing to build out, and eventually these will become standalone videos. But I added a couple points to our recession proofing your portfolio topic that we've been talking about. I haven't looked at metal royalty companies, I don't believe. If you have some specific symbols to look at, that would be helpful, Douglas PC. Again, I don't think I've specifically looked at those. So another topic, again, on recession proofing your portfolio is something else I heard that fell in the topic of consumers reducing their discretionary spending. Is I heard a recent survey stating consumers are planning to reduce their spending on home improvements. So that means home improvement stores like Home Depot, Lowe's, etc. In particular, probably furniture as well, are going to see decreased sales, which means decreased earnings, etc. So these were high flyers during the pandemic. Everybody was stuck at home. They put all their money into home improvements. Well, now they're going to stop. So I thought that was important. And again, we've got some of the home builders. I think one of the furniture companies is reporting earnings this week, so we'll listen to that. Another longer-term topic that we talked about a little bit earlier that I want us to start thinking about, start talking about, is the impact of higher unemployment. As we discussed, Powell's less concerned about increased unemployment than he is on killing inflation now. And if unemployment goes up to 4 or 5%, as long as they get inflation under control, he thinks that's acceptable. So given that unemployment is going to go up, people are going to get laid off, they're going to get fired, companies aren't going to hire as much, so the employment market's going to get tighter. Where are the companies that are going to benefit from that. And these are just my ideas of starting to think about, okay, this is a longer term theme. We're not there yet. Unemployment hasn't really started going up. But as it does, who's going to benefit? Well, I think we're going to see these people that got laid off, etc., or that they want to get out early and get something started so they're not at risk. These companies benefited: Etsy, Shopify, the self-employment, gig work, etc. Those companies benefited a lot during the lockdown of the pandemic. I think some of these people are going to go back to those if they lose their job. And they need to supplement or replace their job income. We may see a resurgence in these areas of people doing their own thing on Etsy, Shopify, I don't know, maybe eBay, Uber, Lyft, etc., gig works. We're going to look at more of those as we go forward. Recruiting firms, again, as it gets harder to find a job. I think some of the recruiting firms might do better. Gig work companies, temp firms like Manpower, etc. Again, we'll build this out a little more and talk about how to play that. Job, yeah, that's another one. Headhunting companies. Yep. I'll put that in here. Recruiting firms, headhunting companies, headhunters. And again, let's talk about this more in the Discord as well. If you have individual companies like Douglas just mentioned, job, we put that guy in there, etc. Let's add to this in the Discord, and in our coming weeks, we'll build that out further again. So LinkedIn, Monster. LinkedIn's owned by Microsoft now. Monster.com, I don't even know nowadays who owns them. So let's talk about it. Talk about it in the comments. Anybody watching this video, please join our Discord, but you can always put it in the comments as well. Also, please vote in our poll on our community page on our YouTube channel. Today, this week, we'll do our weekly trading game plans again at 10 a.m. And we used to do them at 9. There was a suggestion. Specula suggested we try some different times, see what time is best for everyone. So I put this poll up, and please vote on the poll. Right now, 10 a.m. is the preferred time, but again, we don't have a lot of votes, so it would be great to have more votes to know what's the best time for everybody. We want to accommodate everyone as best we can, so please go to our BeachBum Trading YouTube channel and vote on the poll as to what time is best for you. Also, we have that, I believe, in the Discord. So, and again, there's a link to our Discord in the description box below. It's in the notes. It's on our webpage, etc. It's free to join, free to participate in, etc. So we look forward to also talking to you in our Discord. So barring any other questions, I will wrap up for this week. And again, the main message this week is, don't panic. BeachBum traders don't panic. We know there's a way to make money. It's just a matter of finding it. Like Jim Cramer says, I like his saying, there's a bull market somewhere. It's just a matter of finding it. Or there's a way to, doesn't even have to be a bull market. There's a way to make money somewhere. Whether you're longing, shorting, you're playing a bear market, a bull market, etc. There's always a way to make money. It's just a matter of finding it and being patient and not panicking and finding where the opportunity lies. There's a way to make money. So, yep, absolutely. So again, we hope you'll all join us for part 2 tomorrow, 10 a.m. We hope you like this video. Please smash the like button if you're not already a subscriber to our YouTube channel. We hope that you will choose to subscribe, and please let us know how we can improve. Thoughts on bargain outlets. I'm not as familiar as. I'll talk about that tomorrow, Tanvir, but just an FYI, we went long big lots. So we like big lots. I will talk about that more, but yeah, if you have others like that, discount retailers, bargain outlets, etc., is a theme. We'll talk more about that tomorrow too. So thank you again, all of you, for joining our live stream. We really appreciate it. I enjoy the interaction. And again, hopefully we'll see you all tomorrow at 10 a.m. Where we'll pick our stocks to put on our watch list for the week of January 20th through 24th. So you all have a great rest of your Saturday, and we'll talk to you tomorrow. Bye.